Futures are off a bit as data shows that Europe might be sliding back into a recession. Chinese factory activity shrank for the fourth consecutive month as exports dropped again. Can the market continue to ride this accelerated uptrend? I'm Taylor Schrontz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Stephanie Link, Director of Research at TheStreet.
Yeah, so Stephanie, you just went to Fox. They wanted to hear your opinion on, Dow 13,000. What does that mean for the markets? What was your explanation to them?
My explanation is it's a nice number. We haven't seen it in 4 years, so that's good. But I think more important is what's happening to the underlying U.S. economy, and that is getting better, as you know.
Yeah, and I agree with that. And what typically happens technically is when you get to like a Dow 13,000 or S&P 1370, which was last year's high, you do get some sellers. So if we take a quick look at the chart, you will see on the Dow that we've been in such a nice uptrend. There's been two of them. Here's your gradual uptrend that started October 4th. You have your low, you have a higher low. If you go all the way up, we never even tested this during this entire rally. Then you go to December 20th, that gap and go when we closed above this downtrend, we've been in even a more accelerated uptrend where even the Dow Jones is hugging the 10-day moving average. So failing at 13,000 I don't think is a big deal. What we need to look forward or look at is if we close below the 10-day or we break this uptrend, then finally maybe we get a 2 to 5% correction that I think will be viable.
You know, it's interesting seeing this chart in that, from the beginning of the year, we've started to see really much better data, right? Manufacturing is up 8% in the last 3 months. Initial claims have actually improved for the last 12 out of 13 weeks. And, we've seen housing stabilize. So I think it kind of confirms what the chart is showing.
Right, so you have the data behind the actual movement. And the fundamentals in the data always tells you the what, and the technicals tries to give you the when and the timing mechanism. So when they both go together, you see a trending market. And right now we're seeing a trending market. We have some headwinds out of Europe. Usually, like the Greece deal is done, now everyone's saying, well, Portugal needed. I think there was some news out of Hungary today.
Right.
So we're always going to get...
Iran, you have oil and that whole issue. So yeah, there's always going to be something.
What level on oil do you think would be a headwind, for the market psychologically?
I listen to what the companies say, right? I mean, we all kind of think $4 gas prices is kind of a headwind for consumers. But I listen to, Caterpillar, the CEO. He said the sweet spot is actually $90 to $100 oil. Anything above that, you start to see demand destruction. Anything below that, projects kind of get deferred. So I think those are the key prices. And
I think as far as like the overall market psychology, I don't think we really get in trouble until like oil is above 110, 112. I think everyone's used to seeing it at like 95, 100 and change. 110, maybe people say, ooh, that's an extra tax on everyone, so potentially the economy could suffer, and then we get the pull-in. So until we see that, I don't think oil is going to be that big of a headline risk.
And particularly if jobs continue to improve. We are still a long ways off to where we need to be in terms of unemployment and that kind of thing. But, if we can continue to see progress being made, if you give a paycheck to someone, they're going to spend.
Right.
So I think that's also something to keep an eye on.
So with the economy getting better and data getting better and this trend continuing, it's important to see how you manage it. So Stephanie manages the Action Alert Plus portfolio. So what we want to do is we want to go into Sector Spotlight and talk about positions that she's actually involved in, how she's managing them, and how she might want to add to it. And I think the first one on your list is Boeing.
Yeah, I mean, Boeing is like your quintessential industrial cyclical that should participate as GDP gets better. But the story about Boeing internally is really that they finally got the Dreamliner out the door. It took a long time. Right. They've got other new planes and restructuring on other programs that should help margins going forward. So the stock has lagged the market by 500 basis points this year. So I like that very much in the value.
So you're in Boeing now, and you're looking to add?
Yes, I mean, we started small. That's kind of that's our style. We start small, and if it pulls back, that's where we'll be more aggressive.
Well, let's look at the chart now. Maybe I could help you on where you could buy a little bit more. Right now, it is holding steady. It's wedging right here. Okay. It's above all the moving averages. So if it were to break below this area of the wedge with the market correction, just say below 74, maybe you see this moving average, or that dip to buy would be around 71.25. But if it continues to go sideways here and doesn't pull in, I think traders like myself would even get involved with this for a momentum play. And I haven't said that with Boeing in a while, but if it gets above this 76, 74, you could see a move to the upside with no pull-in. So I think I like this as a trader. Nice tight pattern, breaks to the upside, you go with it for momentum. If the market corrects, you look at this moving average, and then you look at the 71.24. And those are the two, those are my two plans, or that's what I would do from a trading standpoint.
Yeah, that's very exciting, and it actually just complements what, again, on the fundamental side of things, I just don't, unless we have a massive, kind of a macro pullback, I just don't see things that are going on at this company that would see a major correction. So I like the risk reward here.
Good, and I think the next one we're going to talk about is JP Morgan, which you guys know in T3 land, I love to trade this one. Last Thursday, I bought JP Morgan right around 38. It's been a nice 3-day move. I did take some off yesterday into the strength, so it'll be interesting to see, where it could hold on the chart. And I know that you just put it on in the AAP also.
Right, yes, we started small, again, because it's had a nice move, but it's lagged the big five, meaning, Bank of America and Wells Fargo and Goldman and Morgan, it's lagged the big five names by 13% in year to date. I mean, this has been such a laggard. It's trading in line with kind of the group on a multiple of book basis. And talk about if you get better jobs, housing, and the economy, I mean, financials should continue to work. So I like the fact that it's at a good value within the large cap space.
So if you look at the chart right here, and usually JP Morgan leads, so as a laggard, maybe it does play catch up. This was the day that it held the 20-day. That was when I was interested in it. Yesterday, I wouldn't call this a breakout failure. It just couldn't get going. I see resistance around 40, so if we do get a minor pull-in, I think the dip to buy would be down to this 37.80. So I think you buy the 20-day moving average. As you see, it's been riding it the whole time. Then every now and then you get a breakout. So I like JP Morgan. I think just watch Goldman Sachs as a gauge. It's also at like key resistance going across. It tried to get above it yesterday. It couldn't get above this 117.50. There was a note today about investment banking getting a bit better, naming Goldman Sachs. So if we can get above 117.50, I think we still see some positive momentum to the banks.
Certainly, and again, higher markets, better capital markets, better investment banking, better flows. I mean, there's a lot of things that are incorporated with better markets. So we like to see that in the financial world.
Oh, good. Well, let's switch gears right now with what? K? Is that
Kellogg? Yeah, that's not. Yeah, it's a name, and they're actually there's a big industry conference this week called CAGNY. It's down in Florida, and it's all of the consumer staple stocks are there. So the company actually we like it because they just made this major acquisition with Pringles, and I think it changes the landscape of the company. It gets them more international exposure. It helps in their distribution platform with their cereal business, and we know cereal is not so good. I mean, General Mills, was a pretty crummy pre-announcement last week. So I think this stock, by the way, is not liked by Wall Street. It has, I think you have, the majority of the analysts have
I don't think I've ever traded it myself, to be honest. Never even looked at it.
It's kind of a boring name, but I like it as an offset to some of the cyclicals that we own.
And sometimes boring is sexy because you can't have sex and sizzle everywhere. It'll drive you nuts. So
and you have dividend. You have a dividend yield too, which is nice.
Right, you get paid to hold it. But if you look here, I looked at it because Stephanie was coming. I'm like, wow, look at Kellogg. Look at this gap. You guys know I love gaps, right? Here is your gap. And then it's been slowly consolidating above it, not even filling it. So to me, that shows me the gap is controlling the stock to the upside. This shows me that there's power here. So if you want to trade it long, I think it could be long short-term versus gap. This is about 51.96. If you want to be a little bit more careful, don't buy it at this area. Wait for it to cross above this descending little trend line. So if this thing gets above the high here, about 52.49, it could start to go again. You know that I say gaps are very important. We saw that with the earnings of Apple, with Qualcomm. They can't fill those gaps. That shows power. So maybe Kellogg will get some more attention on the street.
And to me, if it does pull back, you buy it on yield. The dividend then gets that much more attractive because we are longer term investors.
So you get bang for the buck, and we love that here. And the last one in this sector is, or this group that we're talking about is LCRX, which is a semi-equipment maker, which I think a week ago they got downgraded. I'm not exactly sure why, but they've been just slowly retracing back, which to you is a buying opportunity.
I do. I think that the semiconductors, first they're leading, kind of a leading indicator group, right? So if the economy is improving, the cycle should start to improve. And after years of kind of underproduction, I think if you get a little bit more demand, utilization rates can actually expand. Plus, they recently made a pretty significant acquisition. And I always like an internal story with acquisitions because you get those synergies and the cushion to earnings. So I think this one is interesting, and particularly on the JP Morgan downgrade of the stock yesterday. I think it's a good opportunity.
Are you in there yet?
We're not. And we're not in Kellogg either. So these
so
are names that we're kind of looking at as on our radar screen.
Oh, so maybe I can give you the technical entries and we could help here. We could help here. LRCX, if you look here, you did have, whoops, wrong symbol, LRCX. There you go. If you see here, it put a peak in at 45. It's been working its way lower. It's at the 50-day. So it is showing some relative weakness. So those who could accumulate with a plan, who are believing the story, I do think this level is tradable against it. If we were to pull back more in the market, I would say this would be the area that is probably compelling. Anything below this, I think you'd get a little scared, but I think between 39 and 40, that could be your accumulation on the dip, and then when it starts working, we'll come up with a way to add as momentum comes in.
And after they complete the acquisition, they are going to actually be in the market buying back $1.6 billion. So I like that as support too. So
Yes.
let's keep an eye on it. We'll see where it trades, but I like the levels, and we'll be pretty disciplined on that.
That looks very good. And then we're going to take a quick commercial break. Then we're going to come back with some stocks that are working that we might want to trim. So we'll be back right after that.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Okay, we're going back in the trenches with stocks that we've been actually holding, or Stephanie's been holding, that have had big runs that maybe you could take a tier off and trim and see her strategy with them. I think the first one is FLR.
Yeah, Fluor, actually, we love it. It's an engineering construction company, late cycle. It's a play on oil because 60% of their book is oil projects. It's just had a nice move.
It has.
So we've been kind of trimming into strength. They report this week, and it may not be great. It's a very volatile one, so if it actually falls, we would actually be buying it back. But should it pop up, we probably will be trimming a little bit more. So it's a kind of a trading name here.
Right, and we've been looking at it, and it's been going high. If you look at the chart here, look at this trend. It's been unbelievable for this stock, starting from the low. When we would have liked to get involved, I'm not sure when you executed on this is when it broke this mini downtrend. And ever since then, look at this trend to the upside. Very, very strong. You just had 3 up days above the high, so not a bad area to trim some. So, as a trader, if I was long this, I wouldn't be taking it into earnings.
Yeah.
I'd be waiting, and I'd be waiting to see what happens after. Sometimes I take in the money calls because it's premium paid, but as a portfolio manager, so you are out of like a 1 to 3 tier system, what tier would you say you would be holding into that earnings?
Well, I think that it's a 2, just because the long-term fundamentals are so powerful. And this company has $40 billion in backlog. It's huge. The visibility is great. But again, it's just had such a nice move, and I know, just from history,
Right.
owning this thing, it's very, very volatile. So this thing could be up 5 and down 5 in a heartbeat. So that's why we were trimming.
Okay, so then after earnings, maybe we'll revisit it. We'll see where it's opening. If it screams on earnings, I bet you that's where you trim some. If it's down $5, you take a quick look one more time. You look at these moving averages. Perhaps it would be buyable right around here. And then I don't think it'll get there, but this would be a major area that I'm sure you'd be loving to buy, especially if you sell some into strength. And the next stock you're talking about is ESV.
Yeah, ENSCO. So same kind of thing. Just a great quality, high quality company. And this is deep water drilling. We've been very bullish on the deep water market. It's tight, very tight. They just announced another contract last week that was actually better than expected in terms of longer and more money per day. So we like it, but this also is one that we were trimming into the quarter because, again, expectations are pretty high.
See, that's the problem. Where it's not a problem, but it's actually good when the market's going up. The question is, how do you hold your winners? And that's always been a problem of mine. Is I'm always getting out a little early. I want to book the trade, whereas sometimes you just have to let them go. And if you look here at the chart of this one actually has a nice little wedge pattern. This one had a nice move. It broke above this key area around 48. Then it flagged once again, and now it's wedging. So at this particular point, to me, it doesn't even look that overbought. It looks actually reset up. If the market stays strong and it starts to get above this 56, this could make new all-time highs.
Wow.
I guess if we correct and embrace to the downside of 54, then just like the other ones we saw, you could see the moving averages coming right around there. So at this point, this still looks set up. This would be on my radar as a trade, and I think that you stay with this one because it looks good.
Cool.
I think the next one you wanted to talk about was UN.
Yeah, Unilever, it's a great story. It's a company that is run by an executive that used to be at Procter & Gamble. And we know P&G kind of knows what they're doing. So Unilever, he took over, he restructured it, he improved their products, their distribution, and also they do about 50% of their sales now in emerging markets. And he has intentions of getting that to 75% in the next 5 years. I like emerging markets. That's where the growth is. So I like it. That said, it's a very tough sector right now with oil where it is. That's a big cost for them.
Right.
And I just feel like this one, if it were to move, 35, 36 is our target. This one we would actually trim.
Okay, I was looking at this pattern here too, and it was surprising. You always introduce me to stocks that I would never really trade, and this one looks good.
The boring ones, right?
No, but you know what? Like an old dog teaching new tricks. As traders, you can't just be in high beta. There are other groups that work and that move. And right here, look at this chart. You know, it has a nice uptrend. You could go all the way back here. Here's your gradual one. And then, you know, for this stock, you could even say, here's your more accelerated uptrend, and it's wedging. So there's still room here. If this were to get above this 34, you will see, what's your target, you said?
I have 35, 36.
So then that means that this stock has to make new highs. So as a trader, I would be buying it above 34, and then the next area would be to fill this gap, and then you have the highs there. So last one I want to talk about is something you spoke about like last year that you loved in December was APA.
Yeah.
Something that I've been trading too. I put some buy prices on it. For me, it's been tricky. It's hard to trade intraday, but it's been working. And right now, I think it's a lot higher from where we spoke.
Yeah, and it's had a nice move, and that's really at the end of the day. Once again, it's had a good move from its lows. It is a premier E&P company with an outstanding management team. They just made $16 billion worth of acquisitions over the last 3 years. So you're going to see enormous growth. And the interesting thing about these guys, they can kind of figure out what's hot, where to put their money, where to invest, and they've got that flexibility, and they've got exposure all over the world. So it's just had a nice move. And it has exposure to Egypt, and about 22% of their production is Egypt. So you just have to be careful, because one day we may wake up and there may be an issue. So that's why we've kind of been trimming it back in addition to the price appreciation.
So we could have the Arab Spring all over again.
Oh, I hope not.
The guy riding in there on the what was he on, a camel? That was a little nutty. But anyway, this stock has had a nice move to the upside. If you look here, it's been trending. And again, it's always so hard to take stock off or even hold it. This is when it triggered above that little downtrend around 100. I remember playing it that day. I think this day got me, and then finally it started to go. So here at 109, I think it's extended from the moving averages. I do agree. You could take some off, but ultimately, there's no reason why this thing can't see 115 to 125. That's the next area of resistance. It's just all, it's all based on your time frame and how you're going to manage it.
That's right.
So now what I want to do is I want to get into some quick hits. This should be fun. We got to be quick. Alex always said to me, these are quick hits, Scott. So we got to keep them quick.
Promise.
First one being IBM. I know last year you rode it really well.
Yeah.
Do you like IBM at all?
I like it. It's just had a nice move. I wouldn't be buying it here. It's trading at 13, 14 times earnings. That's high end of the large cap tech space, but it's a great quality company. If it pulls back, I'm a buyer.
Okay, well, I've been looking at it, and it's been a little hard because it's between 190, 195. I'm in tier 1. If it breaks 190, I'll get out of it above 194.50. Finally, we get some momentum, and then I think that you get that trade there. So for right now, I guess people do think it's expensive. That's why it's not breaking out yet.
Yeah.
For me, 194.50 is that level.
Sure, and if you want beta, you're not going to be making a lot of money with IBM. This is much more conservative, lower beta technology. So if that's what you want, that's great, but just know what it is that you're after.
Okay, so if we're talking about beta, let's talk about Apple. Apple, to me, yesterday had a very surprising move. I thought it would range out a little bit longer, that it would need some time to spend above 500, and it blew through some resistance. Fundamentally, obviously, Apple.
I mean, it's a great story, and the product cycle story is what's so exciting, right? The iPad 3, the iPhone, the next version of the iPhone. I mean, how many numbers are we going to go here? the Mac refresh. All of these things are great. It's not exactly undiscovered, though, Scott. So I mean, it's a little hard to be buying it here. Wait for a pullback. Plus, it's really loved right now, right?
Right.
I mean, it was hated in December when it fell, right, to 390 or so, or 380, and now it's loved. So just wait for a pullback.
So real quickly on the chart, Apple, you'll go right here. Nice move yesterday. I would say if you're trading it short, be short versus 526 high. I do still think you need to spend some time here. If it pulls back to this 10-day moving average, which is around 500, I think that's your buy in the dip. I don't think we see this 486 that we saw last Wednesday, anytime soon. If we do, I guess it'll be a steal. Another one which we have to go quicker is going to be Wynn. Yesterday, Wynn came out with that lawsuit, and I said to everyone, I'm like, let's talk to the sales teams. What does this mean? Does this mean the overhead is finally cleared? It had a big move for me. I'm not even going to ask Stephanie about it because I got to go quick.
Yeah.
121, that's all it is. It's a price level. It stays above 120 and starts going above 122. I think there's a trade there. So I want to talk real quickly. Goldman Sachs. You like JP Morgan. Do you think there's a trade there in Goldman Sachs?
I mean, I think it has to buy time. It's had a nice move. So, if you believe higher markets, you believe in financials, Goldman will be one of the leaders.
And I still think that 117, 117.50 is that line in the sand. If you're short, if we close above there, you cover. If you're looking for some momentum, maybe today on the upgrade, you can get a good trade there. So with all that said, obviously there's so many different ways to play the market, and what we're trying to do here on Morning Call is give you a fundamental, give you a technical approach, give you a way to use a tier system so you could add cash flow, but then also stay with positions, because Stephanie, your time frame is so much longer than mine.
Sure.
And I'm sure by using a tier system and managing your risk, you could take advantage of spots in the market that are more profitable, and then extensions where you're like, okay, I just enjoyed a nice run, let me just pare it back but stay the course.
And we rank stocks each week. We have 1s, 2s, 3s, and 4s, and so we do the same thing. It's just a little bit longer time horizon.
All right, well, good. Well, this is our first, not our first Wednesday together. We've been together soon. We're going to do Wednesdays moving forward, so make sure to tune in. My name is Scott Redler, again, T3.
And I'm Stephanie Ling from TheStreet.
Have a great day trading.